What's up, everybody? Rob Wilson here, host of the Money Monday Show on Rob Wilson TV and founder of the March Money Madness Bracket Challenge. Thanks for coming back with me. I've got your round 3 recap of March Money Madness right here. And this week, it was all about comeback stories and analysts, and I'll explain that in 1 second. So in the third round technology region, we had number 16 Apple versus number 12 Hewlett Packard. And Apple down a significant amount this week, down 4.17%. So HP won this matchup as it was up on the week 3.47%. When I say it's all about comebacks, you know how Tiger Woods, was really down in the dumps a number of years ago, and now he's back on top of the golf world, number one, just won a new tournament, and people are looking to see him maybe win a major this year. Well, Apple is like the Tiger Woods from the press conference a few years ago, whereas HP is in a turnaround mode, and people are now making bets that they may, quote unquote, win a major. They may come back, their sales may improve, but people just aren't sure about what the next big thing from Apple is going to be, and you saw it down again this week, 4.17%. So there is value in turnaround stories and the underdogs, just like the NCAA basketball tournament. Same thing happens in the investment world. Another matchup in the third round, we had number 6 BlackBerry versus number 2 LinkedIn. And BlackBerry down 3.09% this week, so LinkedIn won the matchup even though it was down as well, but it was only down 2.99%. So close matchup, but LinkedIn was able to win this one. And really, this was about BlackBerry. Investors just don't know what to do with BlackBerry. First of all, during the week, the stock initially went up because investors were excited about them shipping the new Z10 phone. They announced that they shipped over 1 million of them, and their profit, they actually returned to profitability in the fourth quarter, which is a good thing after a number of years of decline. And, the other phones were gaining more popularity, so BlackBerry just wasn't making any money. Now they've actually swung to a profit. The problem is, in the same time in that earnings report, they announced that they had been losing subscribers. And that's not a good thing. If you're just shipping phones to people who already have your phones, it's a good thing because you are making some money, but you're not increasing your subscriber base. You're not growing. And eventually, if you keep losing subscribers, you're not going to have anyone to sell to. So not good news. BlackBerry down 3% on the week, so LinkedIn was able to bring that one home. Third round in the financial region, number 16 Aflac versus number 5 Chase. Aflac wins the matchup by just being just a little better than flat, but Chase down 2.71%. What was this all about? Well, executives from JP Morgan Chase were getting grilled last week by lawmakers on Capitol Hill about what they knew and their role in this $6 billion trading loss that they had last year. And also, there's been news that maybe they didn't alert the authorities to what they knew of Bernie Madoff's multi-billion-dollar Ponzi scheme. And so investors seem to be a little worried about this grilling on Capitol Hill. Sent the shares down 2.71% last week. Also in the financial region, number 6 American Express versus number 15 Bank of America. American Express wins the matchup, up 1.87%. Bank of America down 3%. So what happened with Bank of America last week? Well, a report came out, says that Bank of America actually receives the largest number of mortgage complaints. And this, I think, makes investors a little uneasy because we are just trying to recover from the mortgage crisis. And they've already had to pay out billions of dollars in legal fees after a number of lawsuits related to their merger with Merrill Lynch and the purchase of Countrywide. And so the report also said that these big banks are going to still face legal fees from that crisis. And if Bank of America has to continue paying all these fees, it may slow their growth a little bit. So you saw the shares down 3% this week, even though they've done very, very well this year, down 3% this week. Third round in the consumer region, the number one seeded Best Buy versus number 12 Cheesecake Factory. Best Buy actually down 2.77% this week. Cheesecake Factory up 4%. So what's going on with Cheesecake Factory here? Well, out there at the big banks and financial firms, they have analysts who study particular stocks and get really, really deep into their business models. Well, one of the analysts that studies Cheesecake Factory raised his estimate on the stock to a target price of $40, which is above where it's trading right now. And so you saw investors cheer that and want to get behind that move, and they raised the shares up about 4%. Also, in a news release, Cheesecake Factory said they are right on the verge of opening a bunch of new stores in Latin America so that they can take advantage of the growth in those countries. And investors seem to like that. Investors love growth. If you can go to another country, open up new stores in new markets, make more money, that makes investors happy. And so you saw the shares up 4% this week. If you're wondering where to find out about these analysts and what their opinions are, if you're getting comfortable with using Yahoo Finance, then you see this page here on Yahoo Finance. You see on the left-hand side, you can click on Analyst Opinion, and there you'll get information on what the mean recommendation is. So you see right here, it has a 2.7 recommendation, and the scale is 1. 1.0 is a strong buy, 5 is a sell, so it's right in the middle. So analysts basically rate it a hold at this point. So not buy it, not sell it, but if you have it, hold on to it. And you can also see where the mean and high and low price targets are. So right now, the high target price for shares of Cheesecake Factory, $45, and it's only trading at $38.68. So is this something that you just blindly want to go and say, hey, the analyst says buy it, I'm going to buy it, or they think it's going to 45, I'm going to buy it? No, but this is one piece that you want to put into your overall investment thesis when you're trying to decide whether or not to invest in a certain stock. Third round, consumer region again, Coca-Cola number 11 versus number 10, Whole Foods. Whole Foods down 1.17% this week. Coca-Cola wins. Coke was up 1%. Really this week it's about Whole Foods. What happened? Well, one of those analysts who study Whole Foods a lot, really into their business model, lowered their rating on Whole Foods. And why? Well, because they said the same store sales are experiencing decelerating growth. So when you're a restaurant chain, you can always make more money by opening up new stores. But what the analysts want to see is that stores that have been open for a while are continuing to grow and make more money year over year. And while Whole Foods stores are continuing to make more money year over year, that growth is slowing. And so consequently, the analysts decide to take his rating down on that stock. And you saw the shares go down 1.17%. So you see, when analysts raise their estimates, sometimes investors get behind it and raise the stock price up. And when analysts lower their estimates or rating, then it can send the shares going down. Third round in the industrial region, number 1, Cabot Oil and Gas Corporation versus number 12, Boeing. Cabot Oil Gas basically flat, but just down slightly. Boeing actually won this matchup, going up 1.21%. This week, it's really all about Boeing. And what happened here? Well, Boeing has had trouble over the last few months over issues with their batteries on some of their new planes. They were overheating. They were starting fires on some of the planes. And consequently, the government made them stop production until they figure out what was going on with the planes. But recently, there have been an uptick in orders for some of their planes. There was a report that came out last week that said durable good orders in the fourth quarter climbed 5.7%, and that was largely on a snapback in bookings for Boeing jets. So while they are still dealing with the battery problem, again, we've got a good comeback story here in that they had some issues. It pounded the stock, but now they're working through those issues. They're making more orders. Investors love a comeback just like they do in sports. If you're wondering where these kind of announcements come out, like the durable goods, well, again, if you're getting comfortable with Yahoo Finance, here's a link on Yahoo Finance that you can go to get a calendar of when all of these economic data reports come out. So here's a chart of all of the reports that are coming out this week. You see it reports on construction spending, factory orders, auto sales, if you may own some auto stocks. So it's important to pay attention to when these reports are coming out. You may have your own thesis on whether it's going to be a good or bad report, and that might affect whether you want to hold your stocks, you want to buy, or you want to sell certain stocks. So what are the key takeaways from this week in March Money Madness? Well, first of all, the art of the comeback. You know that when you're watching a football game, or even if you're enjoying March Madness this season, you love the comeback, you love the underdog. So there's value in finding companies out there that may have experienced some issues, which rightfully drove the stock price down. But if you have a feel for their executive team, for their strategies, and what they're going to do to try to come back, that stock might be a good one for you to buy, because that's oftentimes when you can make the most money after stocks have been beaten down and they're on their way to back up. Take note of analyst opinion, upgrades and downgrades as we saw this week. Analyst upgrades a stock, the price goes up. Analyst downgrades a stock, and the price goes down. This is not to say that that always happens in lockstep, but you want to understand what the analyst opinions are and whether they're upgrading or downgrading stocks that you own. And the last thing, pay attention to economic data. You got to be watching the news. You've got to be reading the newspaper. You've got to know when unemployment reports come out. You've got to know when durable goods and things like that come out, because those economic data points are things that you can take away information on how your stocks may be doing. If durable goods are up and they mention Boeing, then that's good for your stock, et cetera, et cetera. So pay attention to the economic data, analyst opinions, and don't forget about the art of the comeback. Just like Tiger Woods, some of these stocks will get beaten down and then come back and be on top of the world. Guys, thanks for playing March Money Madness. Hope you got your picks in for this week. Make sure to follow me on Facebook or Twitter so you can get tips and information and notes about the stocks that are still remaining in the game during the week. It'll help enhance your learning experience. And of course, I'll be back here next week with a recap of the semifinal round. Thanks, guys. Have a good week. See you then.